First off, the two prior bull markets, the one that peaked in 80, the one that peaked in 2011, if you measure from the bear low that preceded the peak, there were eightfold gains. If we had an eightfold gain, it would be $8,400 gold. And that only matches the gains of those two bull markets. We're in a different world now, too. So I don't know where gold's going, but it's at least going to that 8,000 plus. And then you can at least start to talk about, well, this is done it a third time.
And I think I would confirm Michael's analysis completely. I mean, he's coming at it from a completely different viewpoint. But what I see, it's just ringing true what he's saying, that this is going up, and we're going to see this in triple figures, I think, in the not too distant future. I'm not going to put a time on it.
In a recent discussion, monetary historian Alasdair Macleod and market momentum analyst Michaeloliver explored the possibility that gold may be entering one of the strongest bull markets in modern history. Their perspectives differ, but both point toward the same conclusion. Gold's long-term trend is accelerating, and the upside could be far greater than most investors imagine. Macleod notes that the last two major gold bull markets, the run into 1980 and the surge into 2011, each delivered roughly eightfold gains from their preceding bear market lows. If this current cycle were to match those historical moves, gold would approach $8,400 per ounce, and that's without accounting for today's radically different global financial environment. Structural debt issues, monetary instability, and declining trust in fiat currencies could all fuel an even greater breakout. Oliver's independent momentum work supports the same direction. Gold is following a powerful long-term trend that reflects strengthening demand and weakening confidence in traditional financial systems. Both analysts believe triple-digit silver percentage gains are not only possible but increasingly probable. While no one can pinpoint the exact timing, the setup is clear. Gold appears positioned for a historic move, potentially surpassing prior cycles in speed and scale. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates. And comment below to share your thoughts on it. Appreciate you for tuning in. Now, listen to the interview.
She has accumulated an awful lot of silver secretly. We don't know how much, but it is huge. You can take, that's the way it is. Now, in recent years, she's sat on the price of silver by supplying the West as silver demand has increased. This is why, if you look at the Silver Institute's numbers, it's been in deficit for the last 5 or 6 years. So how could that happen? Well, the answer is supply. China has made sure that there's been sufficient supply out of what is in the investment line, which actually is strategic stocks, to ensure that the price doesn't rise. She's now decided to stop doing that. That is why suddenly silver has got a bit under it. This is why you've got a problem in the London market with no liquidity. There is so-called liquidity in COMEX, but whatever is there is likely to be held on to, I think, by the people who have got silver and don't want to part with it. Shanghai's liquidity also has been badly impacted. Now, from January this year, and certainly for the next 2 years, for 26 and 27, China has a new policy of licensing exports of silver. And the idea is to restrict exports of silver even further. So this confirms that China has now taken the view, we can't manage the price anymore, we just don't want to lose our stocks. So there isn't going to be the liquidity coming in at a time when India, which is the most dynamic economy in the world now, I mean, growing, 8-10% per annum, it is where China was 20 years ago, is now beginning to step up its manufacture of technology that requires silver, particularly photovoltaic cells and all the rest of it. And PV production is being subsidized by the government because, on the one hand, they're opening new coal-fired electricity generators. On the other hand, they're sort of trying to persuade us in the West that they're actually environmentally responsible. So, which is why they're doing that. But you've now got India demanding huge quantities of silver. And it's not just understanding that silver is a monetary metal. I mean, one of the things that's happening on that side is that, scrap silver, which you would think would be coming out on these rises, isn't coming out at all in India because people would rather hold on to scrap silver than have rupees. The whole of the situation is an enormous squeeze. And that, I think, is the initial point about where the silver price is going in depreciating fiat currencies. So we're at this fascinating once-in-a-lifetime juncture as far as silver is concerned. But the key thing that has happened within the last 6 months is that the Shanghai Gold Exchange, which never, ever permitted any gold to leave mainland China, other than a little bit into Hong Kong, which would come back from tourists buying gold trinkets and all the rest of it. They never let any gold go out of China. It was Hotel California for gold. It could go in, but it couldn't go out. Now they've opened a vault in Hong Kong and they're opening a vault in Riyadh. Why is this? I mean, this is all part of a move, if you like, which will eventually see an exchange rate, a fixed exchange rate between gold and the yuan. But China has a problem with this in terms of timing. She can't suddenly come out tomorrow and say, right, okay, this is the rate. We're fixing the rate, yuan, gold, bang. And that's it, because she would destroy the Western capitalist system. And it's not in her interest to do it. And not only that, but she doesn't want to have that blame put on her. She's not an aggressive nation. What she will do, however, is when the thing really starts sliding, when the dollar really starts sliding against gold, then she will come in and protect her currency. And so things like chips and all the rest of it, that's all part of this plan. The currency will be secured. And for the entire move of BRICS and Shanghai Cooperation Organization,
we look at things differently. We look at price, but secondarily, we look at momentum of price. And I don't mean overlaying an RSI or an MACD, but it's a structural thing where we plot the price action in relation to given moving averages, long-term, intermediate, and to help determine trend change. Because almost always trend change will first be signaled by momentum trend breakage to a new direction. Okay, 90+% of the time it works as a leading indicator. So we look at all four major asset categories. It's a bad idea to just own gold and silver and look just at gold and silver. There's too many things out there that impact and will impact.
In a recent analysis, experts outlined a developing situation in the silver market that could reshape global pricing for years to come. China has quietly accumulated massive silver reserves, an amount unknown but believed to be enormous. For years, China helped suppress silver prices by releasing supply into Western markets, even while global demand rose. This explains why, despite persistent structural deficits reported by the Silver Institute, prices remained contained. But that era appears to be over. China has now sharply restricted silver exports, implementing new licensing rules through 2026-2027. Liquidity in London and Shanghai has tightened, while holders of physical metal show little interest in selling. With supply constrained, silver has begun to find a strong bid. At the same time, India, now one of the world's fastest-growing economies, is driving unprecedented industrial demand. Its expansion in photovoltaics and advanced manufacturing requires huge quantities of silver. Yet, scrap silver is not returning to the market, as savers prefer metal over devaluing rupees. This combination of hoarding, industrial growth, and shrinking supply has created a once-in-a-generation squeeze. Adding to this, China's recent moves, opening vaults in Hong Kong and Riyadh, and preparing for a potential long-term gold-yuan linkage, signal a structural shift in global monetary strategy. Momentum analysts also note that trend changes in precious metals often appear first in long-term momentum indicators. All signs point to a pivotal moment for silver. Now, let's get into the interview.
Is that if you look at base metals, industrial metals, because silver is being priced as an industrial metal at the moment, then a basket of these industrial metals has fallen in value, priced in gold, to the lowest level for the last 120 years. When you look at the price in dollars of the basket, I mean, it's sort of up, sort of 20, 30 times over that period. But priced in gold, it is now at an 80% discount to where it was in 1900. Now, individual components obviously change because, you've got technological change. For example, some commodities get used more than others and so on. But if you look at, if you look at the copper That is central to the whole thing, Dr. Copper. So I think that's the first point I'd like to make. Silver is being priced as an industrial metal. The whole cohort of industrial metals has been suppressed by the paper game. The paper game, both in terms of derivatives and also in terms of fiat currencies. So that's the first point I'd like to make. If you look at the market now, however, that's sort of and then a further interesting point. China has been controlling the price of silver for at least 2 or 3 decades. Now, China as a silver miner is the second largest in the world, and also she's been importing doré, both silver doré, but also doré of or if you like, ores, copper ores, nickel ores, lead ores, zinc ores, and all the rest of it, which of course is something like 60–70% of the supply of silver. She has accumulated an awful lot of silver secretly. We don't know how much, but it is huge.
A major shift is unfolding beneath the surface of global commodities, especially in the industrial metals sector. Silver, currently priced by the market as a simple industrial input, is quietly signaling something far deeper. When industrial metals are measured in dollars, they've risen 20 to 30x since 1900. But when priced in gold, the entire basket has collapsed to its lowest valuation in 120 years, trading at nearly an 80% discount to its historical level. This disconnect suggests that fiat currencies, derivatives, and the broader paper market have artificially suppressed true value across the industrial metal complex. Copper, often called Dr. Copper for its economic insight, sits at the center of this distortion, and silver is tied directly to this suppressed pricing structure. What makes the situation even more striking is China's long-term influence. As the world's second-largest silver miner and a massive importer of silver-bearing ores, China has accumulated huge, largely hidden strategic stockpiles. For decades, this allowed them to guide global pricing from behind the curtain. But the system is showing cracks, and the underlying fundamentals are starting to surface. With industrial metals historically undervalued in gold terms, and with China's strategic accumulation continuing to reshape supply dynamics, silver may be positioned for a major repricing. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on it. Appreciate you for tuning in.